Please welcome Senior Advisor at the Milken Institute, Rodrigo Bettini.
Good morning, everybody. My name is Rodrigo Bettini. I'm a Managing Director and Head of Latin America for the Institute. Very excited to welcome you to this timely conversation on Latin America, a region that continues to punch above its weight in the global tech and investment landscape. Cycles of uncertainty, the fundamentals are clear. A digital-first population, world-class founders, some of the strongest venture returns anywhere in the world. Companies like Nubank and Mercado Libre have paved the way, and today's innovators are going even further, building solutions that tackle deep structural challenges across finance, housing, labor force health, and many other sectors. This isn't just about growth. It's about inclusive, sustainable innovation that matters. And for global investors, Latin America remains not just a bet, but a strategy. Let's dive in. Please help me welcome our extraordinary panel.
Thank you, everyone. Welcome to the panel. I'm Julio Vasconcelos. I'm the managing partner of Atlântico. We're an early-stage venture capital fund in Brazil, investing throughout the region. And it's a pleasure to have such an amazing celebrity panel of folks that will be able to share, I think, the great story of everything that's coming out in Latin America. I think we were just missing one speaker, Lady Gaga, but we figured we didn't have enough time to fit her since she was in her room in Rio. So we'll do great here. So the theme of this panel today is how Latin America does it best. And thank you, Rodrigo and the Milken team for such a great invitation to be here today. This is something that we took out of our annual report that we publish on tech and venture capital in the region, about to show how some of the great companies that we have in Brazil and Latin America are not only companies that are doing well in the region, but they're actually companies that are winning on a global scale and producing some truly global great outcomes when it comes to technology. But I think in trying to share the story with everyone here, I'm actually going to rewind to the very first research report we published and what the theme of that was, which was actually the digital transformation of Latin America. And in that report, we tried to tease out a framework of trying to explain the key drivers of success as being the people, right? So the entrepreneurs and the founders, the people that are actually building these amazing companies, people like Cesar, people like Maya. The second pillar was regulation, right? A key component here for things to be successful. And I think Roberto here probably is our winning figure here in terms of really ushering in regulation that's changed the region. And finally, capital. And I think Scott, as a pioneer in the region, has really been at the forefront of that. So I've tried to organize our conversation here today around these three pillars. And we'll start by talking about the past. How did we get here and where are we today? And then we'll shift gears to a more forward-looking conversation about what's next in terms of technology and innovation. And I want to be able to share this story with all of you actually through the eyes of some of these protagonists that have actually created where we are today. And I think that the idea here is to show the different vantage points of how the region has evolved through some of the folks that are making it there. So I'm going to start out by talking with some of the people, the talent, the entrepreneurs. And I think there's a famous quote from Tom Jobim, who I think anyone that here that knows the Girl from Ipanema song will recognize his name, which is that Brazil is not for beginners. And I think that a key thing about Brazil, and I would apply this to Latin America, is that even though it historically has been a challenging place to do business from the standpoint of having less access to capital, and by capital I mean both human capital and financial capital, what that does actually mean is that those players that are able to command those scarce resources are able to command financial capital, human capital. They're really able to win, and they're able to win bigger, and they're usually able to win for longer. So I think I want to dive into a little bit of this first. And before I ask Cesar to share a little bit of the story here, I wanted to share some interesting data, because I think Latin America and Brazil in particular often get kind of fall behind other emerging markets when it comes to technology. People talk a lot about Southeast Asia, they talk a lot about India, but curiously, if you actually look at the hard data, Latin America has produced more billion-dollar outcomes than either India or Southeast Asia, and has actually created more market cap in total. And that's actually with having access to 1/25th the level of venture capital historically than those other places. So we've really shown our ability to do more with less. Mm-hmm. And Cesar, maybe you can start out by sharing a little bit of the history of WellHub, which originally started as GymPass, way back in 2012, and tell us a little bit of what was it like to found a company in 2012 in Sao Paulo in Brazil, in terms of the access to funding you had, the ecosystem it was, and then tell us the story of how that matured until where we are today.
Oh, very good. Thank you so much for having me. Julio, one of the finest investors in Latin America, and a great panel with Scott, an amazing investor as well, Maya and Roberto Campos. I'm the founder and CEO of WellHub, and as many of you might know, what we're doing is connecting companies, their employees, to hundreds of thousands of wellness options, gyms, studios, wellness apps, in such a way that whenever a company invests in well-being of their employees, the number of active employees jumps from 5% to 25, 30, or 40%, depending on the level of engagement. And this is a very interesting transformation of bringing health and wellness to the entire workforce of every single one of our corporate clients. But the business was not like that when I started the business back in 2012. We started as a direct-to-consumer product. People would go online and buy day passes to different gyms and studios, and the name of the business wasn't WellHub, was GymPass. And the ecosystem was very different back then. First of all, I was building a business that wasn't a direct copy of models that were very successful in the US and in Europe. And as a consequence of that, access to capital was even scarcer than for companies that were pursuing that playbook. And that made it, I would say, 2 times more difficult in the early days, because not only we needed to persuade, convince, and explain the logic of people, but we also had to show with results every single thing that we were doing, and we didn't have a lot of benchmarks to follow. So we needed to innovate and create our own way. And to me, that was one of the reasons why, for example, Scott believed in us in the early days. We found very creative ways to work around this restriction of access to capital. The most important thing we did was to pivot from going direct to consumer. We needed to invest a lot on Google, Facebook to get new consumers. We got into B2B, working with companies. And the highlight there was that companies were willing to communicate to their employees because they also benefit from the employees being healthy and happy. And they would be willing to invest, to subsidize part of the bill for their employees. And that has allowed us to very quickly scale all over Latin America first, and eventually to launch all the other geographies that we operate in today. And we're now in 19 markets all over Europe, the US, and Latin America, and the company is still growing very fast these days.
Cesar, more on a personal level, you had pretty recently graduated from Harvard Business School when you decided to start WellHub. Why did you not stay in the US and try to do this there? And why did you choose to come back home, especially in a time that there were so few role models in entrepreneurship?
You're giving me more credit than I deserve. I actually dropped out. I never graduated from HBS.
Scratch that. And
the reason was to focus on the business in the first place. It was my summer project between the first and the second year. And I'm a first-time founder, first time in tech, building a business that didn't exist elsewhere, in a business model that wasn't present in any other country. The only one thing I needed to control was the connection with the market. And my entire network was in Brazil, and Brazil is the second largest market for gyms and studios. We breathe health, we breathe well-being. Everyone talks about that every single day. So it was the only thing I could control, and it would play into at least that strength.
Perfect. And if you want to hear a good example of eating your own dog food, I saw Cesar this morning. I was like, oh, what did you do? He's like, I already hit the gym this morning. So, he really is the personification of everything that they stand for. Let's take maybe a Dickensian term here and try to tell this through the tale of two cities of what innovation has been like in Latin America. And if Cesar is in one of those hubs, which is São Paulo in Brazil, Maya, who's here with us today, has been an entrepreneur now for the last 8 years,
Correct.
If I remember correctly, in Mexico City, which is probably the other big technology hub. And Maya, I would love to hear a little bit more about the founding of Worky. Your choice also, Maya is a graduate of Stanford Business School and decided to come back home and actually be an entrepreneur in her home country of Mexico. The idea to come back home, why did you come back home? And then tell us a little bit of the story of how the Mexican technology ecosystem has developed over those last years in terms of, again, of access to capital, access to talent, the opportunity. What has that road been like?
Back in 2017, I was living in San Francisco. I stayed for about 3 years after business school was done, and I was working for eBay. And eBay had started to expand its presence in Latin America. They had a really large classifieds website in Argentina. They had another one in Mexico. And I was running finance, analytics, marketing, believing I was like very high up in the chain, but I was working really, really hard. And they decided to move me to Mexico City to start growing the local team. And payroll became a massive issue that we couldn't tackle. And it was shocking to me the level that even eBay could not even afford or adopt technology for payroll. And ADP actually had no presence in Mexico. And with this, every new employee that we hired was never paid on time. Commissions, because we also had a big sales team, were an issue. And with this, well, I was coming from SF, that every single billboard that you saw in the highway was for Zenefits, for Gusto. Workday had no presence there. And then as I started to scratch the surface, I came across two statistics that blew my mind. One was that employee rotation in Mexico is north of 60% per year. This is ridiculous. It's 3 times higher than what it is in the US. And second, which blew my mind for companies that were operating in the space, was that 1 out of every 4 employees will not show up to work 1 day a week without any fair warning. And this was happening to us at a really large, popular tech company. And as I started to seek technology, there was nothing in Mexico that could solve our issue. So with this, I met my co-founder, Charlie, and we decided to start innovating in this space. And very similar to Cesar, within the very early days, we started solving the problem for the SMBs. And there we realized that the SMBs were not very easy to sell to. They have bankruptcy rates of close to 30% per year, and simply growing in that space wasn't efficient. So within time, tailwinds started happening in Mexico. In 2018, we changed powers in the government, and the powers switched from center-right to left. And when this happens, the focus around employee labor regulations and social security regulations was massive. And for the first time, the whisper that this was a positive tailwind for us started happening. Second was the access to capital. Back in 2012, when Cesar founded Wellbe, the first indices of VC funds were happening in Mexico. They offered capital, but not necessarily advice. So I would say over the last 3 or 4 years, we've seen a tech space that is booming with a lot more access to talent. And the VCs in the region are providing a lot more, not only capital, but advice as well.
And how have you seen the regulatory environment in Mexico? I know that it's been quite different than Brazil, and how has that played, I think, a role either in the success or slowdown of your own vision of what's possible?
Back in 2021, there was one of the biggest labor laws regulation that we've seen in Mexico, which is that outsourcing became abolished. And what outsourcing did is it allowed companies to not be the employers of record of their own companies. And in 2022, this law was enacted. And that proved to us that we had to develop our own payroll engine. And as background, what Worky does is we are an all-in-one HR and payroll software for the Mexican market. And building payroll is extremely complex. But we believe that if we didn't build it, we would be leaving kind of like our future down the table. And I'll talk a little bit more of what we want to do with payroll. So with this, now every single year, the government is updating labor laws between 5 and 15 times a year. They don't do it in a calendarized fashion, which used to be the case. So every 1st of December, they would update us in regulations that were to come into effect the 1st of January. But now they can update it any single day that they want. But this proved to us to be win to our favor, and we are the only software in the market that offers you a zero fine guarantee. And we are updating, we have a fiscal lawyer that's reading the Constitution every single day to know what we have to update. So this, to us, provides our customers with a lot more clarity.
Interesting. It's curious how usually entrepreneurs will see regulation, and I think even the role of government, as kind of more of maybe an obstacle to be overcome. But curiously, I would say that in Brazil and in financial services and fintech in particular, regulation has actually been quite a tailwind. And I think those are two words that you rarely see in the same sentence. So regulation has a tailwind. And I've often said, in many public forums, that I think actually one of the most successful startups in the world is the Central Bank of Brazil. And if you think that the Central Bank of Brazil is one of the most successful startups, Roberto was probably one of the most successful fintech entrepreneurs in the world. And he did it as a public servant, as a president of the central bank, I think helping to further that innovation agenda that has benefited Brazil so much. I'm going to let him tell the story, but I did want to share a few numbers here before I hand it off to him, because I do think it's really, really impressive when you think about what has happened in Brazil. I think a lot of folks often talk about UPI in India, which is the real-time payments that the government there created. But just to give you a sense, today, looking off of sort of end-of-the-year December stats, PIX, which is the real-time payment network that the central bank built out and is really now ubiquitous throughout Brazil. It's programmable. It has a very ambitious roadmap ahead of it, which I'll let Roberto share a little bit. But if you look at on transactions per capita, PIX today does almost twice the volume that UPI does in India. And if you actually look at just financial volume on absolute terms, PIX is also roughly about 2 times the financial volume of UPI. I think PIX is one of those big components of the innovation agenda. I think open finance is another one of those big components. I think we're starting to see the beginnings of Drex as well going forward. And Roberto, maybe you can share a little bit with us about maybe this road of innovation that you shepherded as well with your whole team in the central bank. And how did you think about those different building blocks that the central bank launched, as well as what their impact was, I think, on our society, our economy, and I think this level of innovation and quality in the financial system that we have today in Brazil?
Thank you, Julio. So the first disclaimer is I'm no longer at the central bank, so I will talk about what we did and continue, and the work continues. I think there's a lot of things to come. But the idea at the time was, the first thing that came to our mind is, what should financial intermediation look like in the future? And can we actually incentivize the market to go there faster than just leaving the forces of competition? And then the thing that comes from that is there a role for a public good into this process? Or all you can do is regulate and wait for the private goods to appear? That was an important part of the process. And then the idea is, when we think about financial intermediation of the future, we think about 4 concepts: inclusion, engagement, and empowerment. That's one. And everything that I'm going to say here has 4 blocks, so that's one. The second is connectivity, which is the second block. The third one is, we look at data and how important data is, and realize that data in the financial system was not being used properly. We could do better with the data that we had. And the fourth part was, we could actually go to a system or to an environment that is fully programmable and has all its efficiencies. So with that 4 concepts came 4 projects. The first one was PIX, which the idea was we want to generate massive engagement, and we want to, through the engagement, generate inclusion with empowerment so that people can do more things in finance. And we see the numbers that you just mentioned, that we had a lot of people that opened new bank accounts, about 72 million people opened bank accounts, new bank accounts just because of PIX. You had more than 4 million companies that were created. At that time, during the pandemic, a lot of people were producing things that were very small in the ticket value. And if you had to pay for the transfer, you wouldn't be able to survive off that. But because the transfer was free, the PIX was free, you created new business models. I think we increased the velocity. I think we still need to do a study to understand what is the impact on Brazilian growth that came from PIX. That was the first thing. The second is we need to connect that. So the second concept is connectivity. And then the idea is we need to connect PIX to other instant payments. We need to expand PIX in Latin America. And as it was mentioned, I guess was yesterday, a lot of countries, and I was talking to the president of Paraguay, a lot of countries, you already can go there, especially in Latin America. But in Europe too, you can go there and you can pay with PIX, and a lot of companies are offering mirror solutions for that. The third concept is the most important, which is the open data, the open finance, which is if we have data that is widely available and we can organize this data in a way to reduce asymmetric information, then we really can move further and we can do a lot of different things. The data was basically property of the bigger banks, so it was very hard for an incumbent to produce a credit model because he didn't have the data, he didn't have access to information. So the third biggest pillar was, and I think it's probably the one that's going to generate the most acceleration in terms of innovation, is the open finance. Open finance is slower because it's not so easy to understand as PIX, but I think it has a huge potential. The fourth concept is associated with the fourth project that once I have engagement, connectivity, and data, I need to have programmability. And this is what the tokenization comes. So if you put tokenization on the top of that, then you really go much further. So the idea was through the 4 concepts to be able to produce that. What we are seeing today is an increasing competition, diminishing the barrier of entries. It was mentioned a lot of new banks today exist in Brazil because of what we did. As you said, the number of transactions. There is a study done by JP Morgan on the deconcentration of Brazilian market, which is amazing. If you look at credit card, the concentration is down 50%. Some of the products, the concentration, the diminishing concentration is between 20 and 30%. So that was achieved. I think the intersection between tokenization and open finance is probably the most powerful one and the one that we understand the least. We know there's a lot of things that are going to come from that, but we don't really fully understand what that's going. We want to have a system eventually that you're able to do instant portability and comparability. So you have programmability, and with programmability and divisibility, you need to be able to navigate in some kind of environment that you have all your bank data, and then you can compare and you can change products in a very fast manner and secure manner. So where we are getting to, I think, eventually, is people won't have different apps for different banks. We will live in this environment that we have marketplaces for finance. You're going to be able to migrate all your bank data to this one super app or marketplace of finance. And then once you have all your data there, you're going to have immediate portability and comparability. The central bank created this tool that's called webhook, which means that once you initiate a search to compare products, it keeps searching until you get a match. So basically, anybody can plug into a future marketplace of finance and offer a segmented product. So I think there's going to be a lot of segmentation. I think there's going to be a lot of diminishing of asymmetric information because the data is widely available. And so you diminish cost, you generate inclusion. And also, I think the process of being able to do that for the participants of this network generates financial education. So those are pretty much the long-term objectives. Most of what I said we already see today. It's starting to disrupt something, but I guess we can talk about that in the next block.
Yeah, and I think we already see in a lot of the data the impact that I think PIX has had, and I think the overall central bank agenda to increase competition, right? I think through reducing barriers to entry, reducing the cost of being a participant in the financial system, and having sort of lighter weights of playing. By increasing competition, you basically can have better, faster, cheaper products, right, for more people. And I was looking at a recent study, because I think not to give too much of a sort of a macroeconomic lesson here, but one really interesting thing that you see is that as countries increase the percentage of digital payments adoption, you actually see a very high correlation also with the percentage of the labor force that starts becoming formal, right? Because people start receiving money from their salaries in their digital bank accounts. And the more the labor force is formal, also the higher the penetration of personal credit is. So if you think about personal credit as one of the great engines for economic growth and economic development and economic inclusion, you really can see kind of the link between these two things. And if you look at, I think it was actually a study published by the central bank a few years ago of looking at, they separated into two different groups, people that adopted PIX versus those that didn't, right? And then they compared the PIX adopters versus the non-PIX adopters and what the impact was on the participation or access to credit that those people had. And I think it was a 15 percentage point difference of those that access PIX and basically were in this sort of digital financial service in being able to access credit for the first time. So you actually
the lower class was more, that's the average, and the lower class was more than that.
Wow, so I mean, remarkable, right? So really remarkable impact. So I think we've now covered, I think, two legs of this three-legged stool. We've talked a little bit about, people as a big engine for innovation and technology. We talked about also regulation and how it can be a tailwind. And I think that the third leg is capital, financial capital, and capital that goes and finances innovation. And we have the pleasure here of having Scott Sobel from Valor, who's been really a pioneer in venture capital in Brazil and Latin America, and also in pioneering, I think, cross-border venture capital and helping, I think, a lot of, especially U.S. companies be able to grow in Latin America, Latin American companies grow abroad. And before I turn things to Scott, I also wanted to share, again, a little bit of data around the venture capital industry in Latin America, because it's important, I think, for us not just to be making these qualitative assertions that we do better, but actually show that the numbers show it. We did some analysis last year of 60% of the venture capital funds of Latin America over the last 12 years. And the interesting thing that we found was both on a TVPI, so basically what companies are marked on paper today, but also on DPI and realized outcomes, that Latin American funds have way overperformed the global venture capital indices. Just to share a few pieces of data, if you look at global top quartile funds, over half of the funds in Latin America, 52% of Latin American venture capital funds have performed in the global top quartile of venture funds. And I think even more amazingly, 24% of Latin American venture capital funds have performed in the global top quintile, the top 5% of returns. And I think Scott today, as someone that represents an excellent venture capitalist, not just on a regional scale, but on a global scale, I would love to hear your story as a pioneer of how you saw the market evolve. I think how you've seen talent evolve from 10, 15 years ago when you started investing, and then also just what you've seen has been the key ingredients to success for entrepreneurs in the region.
Sure. Thank you for that. And before I get into some of those answers, I want to thank Milken Institute for having me as our part of this, and I'm super proud to be on and honored to be on a panel like this with great entrepreneurs, visionaries, and visionaries from the central bank that are driving innovation from the public sector and other great investors. And I love the theme about doing more with less, because that is what Latin America has been all about, and producing great results such that Julio just mentioned. And just as a matter of backdrop, yes, we founded the firm in Brazil. Now we're dedicated to broader Latin America, and we invest in U.S. and international technology companies. We help them land and expand there. And it's been rewarding from that perspective as well, helping build the ecosystem from that standpoint. let me talk a little bit about where we came from and where we are today and kind of where we're going, and hit upon a couple of things that enable us to do what we do. Obviously, great entrepreneurs like this, and also working closely with the policymakers and regulators. I think you said a moment ago, venture capitalists, founders tend to look at disrupting and not really engaging those communities. And in Brazil and throughout Latin America, it's extremely important, and it's really enabled us to do what we've been able to do. But just let's talk about where we came from. When we started investing in Brazil, there was less than $200 million that was invested in venture capital. There's deals today that are done at that size and scale. Today, we've seen about a 20x growth, so $4 to $5 billion in annual investment in Latin America. I think we've reached escape velocity. You're not going to see it go the opposite direction. Off the peaks of the market, it was at 15 billion. We'll be back to those levels relatively soon. But at the same time, there is scarcity, if you will. It's a lightly served market. There's only 12 venture funds that have 100 million or more of AUM. I think there's only 3 that have over $1 billion, but producing great results. It's just a less competitive market. You have founders like these that are creating incredible businesses, but there's not many founders going after the same or similar opportunities. You don't, as I just mentioned, you don't have a lot of venture capital firms that are dedicated to the market, and you don't have a lot of international ones coming in, so pricing, valuations, multiples are very different. And from our standpoint, if you're able to transact cross-border, you can tend to attract a premium for your companies, because global investors tend to understand the growth profile of your businesses. Therefore, they'll transact at higher multiples. Speaking about talent, if I can, because capital chases talent and outcomes. When we started investing in Brazil, you saw, and today it's very similar to what we're seeing in Mexico, you saw all these international entrepreneurs going there because it's large, connected, and engaged markets. Still, you see that being the case, but I think we're seeing repatriation of Brazilian or Mexican MBAs being at all-time highs, going home and starting their businesses, because I think the risk tolerance has changed generationally. You're seeing that, and it's a viable career path, if you will. And that's been driven by huge outcomes. The Nubanks of the world that wouldn't have been created if it wasn't for the work that the Central Bank of Brazil had done, or payment companies like Stone, in which we've invested in, or CloudWalk, similar, would not have done. And then the scarcity of capital drives real business model innovation. That's what Cesar was able to do with formerly Gympass, today called WellHub, and that pivot to creating a business that could scale, can grow more capital efficiently. But we've seen that now. I think if you really look at all the entrepreneurs in the region, there's this resilience that they have. They are sensitive and they adapt to the macro environment very different than other entrepreneurs around the world. They're used to microcycles, they're used to hyperinflation, they're used to currency volatility. I'll give you one example of this, and I was telling Julio this story that when Silicon Valley Bank had their issue and collapsed, and entrepreneurs and venture capitalists had capital locked up temporarily, our Brazilian entrepreneurs reacted much faster. They got their money out of the bank faster than our U.S. entrepreneurs, and U.S. entrepreneurs got caught by it. But it just shows that kind of sensitivities to the market. And what we've seen from that is that they are able to build businesses that reach profitability sooner. And that's a dynamic. And we've seen that also in our kind of mortality rate. There's kind of parallel dynamics of venture capital that everybody knows about, but our failure mortality rate is relatively low compared to our peers in other places around the world. I think it has to do a lot with that. The markets have reached that escape velocity. You have talent from the world coming there to build. You have now serial entrepreneurs, and you have entrepreneurs that are coming from those big tech companies as operators starting businesses, and it's a very fertile market to to invest in and create these outsized returns that you mentioned.
Yeah, wonderful, and I think we've done a good job covering where we are today. I think a lot of the success we've had to date. I think Scott mentioned a few of these great outcomes that we've seen historically, and just to also just shed some light on that. If you look at Nubank, for example, was one of Sequoia Capital's all-time great returns, right? So again, it's back to Latin American investments, not just being great for the region, but being great on a global scale. Right. I think the same thing I just saw Martin Escobar from GA. He led the investment from General Atlantic into XP. XP was one of the great all-time returns that GA has had globally. That's because WellHub hasn't gone public yet, but soon you'll rival them. So looking forward here, I'm actually going to stick with you, Scott. Please. If a lot of the scarcity and I think the creativity that has spawned, perhaps isn't as present today, what do you think are the ingredients for the next 10 years or 20 years in terms of success for the region?
I'll start with this perspective that a lot of global capital allocators have. They tend to focus on macro and geopolitical, and as venture capitalists, we need to be macro sensitive, but that impacts that scarcity, because if you're focused on that and the headlines, which tend not to be all that positive across the region, you're not looking to the market. But if you're focused on the micro, the trend lines, what is being driven out of the central bank today, what you're looking across Latin America from an unbanked and underserved populations where there's less access to credit and other financial services, there's an enormous amount of opportunity. There's still a lot of opportunity for applied tech. You're applying technology to large, fragmented, inefficient industries where you can drive huge productivity gains and cost savings. So that's a staple. There's going to be a lot of value created from that. But I got to talk about what I'm most excited about, and it's really the work that Roberto Campos and the central bank has done to drive innovation from the public sector. PIX is just the beginning with 75 billion transactions last year and laying the foundation for what's to come with what they're doing with the central bank digital currency and directs. That will really close the gap even further from a financial inclusion perspective. But also, that will enable, and we should listen to Roberto talk about it, the tokenization of real-world assets. Brazil will be the first top 10 economy to be fully tokenized, and that is something we're super excited about. We've been investing in blockchain technologies for a long time, with our first investments in Coinbase and Circle, helping them come to the region, but we're seeing a lot of companies built in Brazil and across the region focused on this trend, and so we're super excited about it. Thank you for that work, and I know we're early in that, but I'll just give you a perspective. I think there was like 20 billion of tokenized assets on chain last year. That will grow by 50 to 100 times by 2030. That's an important market and opportunity to look at. So that's something we're excited about.
So if that's the perspective from capital, I want to hear the perspective now from people, right? From the talent, the people building things, and I want to hear both from Cesar and Maya, because I think that the future of both your companies, I think, is a good way to see some of the opportunity. I think for those of you that don't know, WellHub today has been predominantly growing internationally. So quite an amazing story of exporting innovation from Brazil to the rest of the world, first in Europe and now really growing in the United States. Cesar's based in New York City, just as an example. And Cesar, maybe you can talk a little bit about what that decision was like and the trajectory of kind of from Brazil to the world is like. And Maya, I think that what Worky has represented has been this ability to take software, right? Start as kind of world-class HR software for Mexico, and start looking at adjacent opportunities, right? So the embedded fintech opportunity of providing loans against payroll. And I would love for both of you to talk. Maybe Cesar, you can go first, but sort of about what's next for your companies and how that represents a big theme for how companies in the region are going to continue to grow.
So very good. I'm a big believer that great companies can come from anywhere, and that the basic needs that customers have or companies have are also the same everywhere. In my business, people want to be healthier. They want more access to fitness, to wellness services, and etc. Companies want more productive employees who are more engaged, and gyms, studios, wellness apps, they all want to make more money. They want to grow their business, etc. And piggybacking on that, we went from client to client who we already served in Brazil and had employees in other countries and got them to launch the benefit in all those other countries as well. In such a way that, the US is the market that grows the fastest for us. It was the last market we launched. It's already the second largest market. And in a few years, if it keeps growing this fast, we'll surpass Brazil as a market for us, which was where the company was originally founded. And to me, that's a prediction. I think there will be many more companies coming out of Brazil and Latin America that are going to be global winners in their categories. And it's not going to be because of, a specific natural resource, like arbitrage. It will be because of the raw talent. And as Scott mentioned, our entrepreneurs, they have resilience. They have been using to an environment of high volatility. We have an 2008 crisis, every other year, and that plays to the strength because the world is getting more volatile as we progress.
On our side, I think what was really interesting starting is that because Latin American HR tech isn't digitized,
It's true.
we never, I guess I would say we were really innocent with the load of tech that we would have to build initially. We started with HR, and slowly we went over time and attendance. And time and attendance is particularly important because close to 20 to 25% of a person's paycheck in Mexico is dependent on the hours that they work that week. And especially in the blue-collar space, blue-collar payroll is done on a weekly fashion. So you need all of the live data from time and attendance flowing directly into payroll so that our customers would effectively be able to pay. But what we're really excited about going down in the future is tapping over to fintech, both from the benefits aspect as well as the money movement that is happening within our customers. Interesting statistic, but if any of you as a blue-collar employee goes in Mexico to your local bank and asks for a payroll loan, none of you would receive it. And the issue is that there is no history on your work performance and the companies that you've worked with. And with employee rotations being so high, no financial institution will feel very comfortable loaning you that capital. But with us, that is the power of data that Roberto was speaking about. We know exactly how the company is performing, how good or bad employee you are behaving, what your past work history is, as well as your variable income that you're receiving down the road. So what we're building today is exactly that data model to be able to offer our own employees both wage advance, payroll loans initially, and then slowly start entering aspects that I'm very fascinated about, such as savings and some kind of insurance products for our base. And that is exactly what the software game is about, landing and slowly expanding within time.
Perfect. And I think tying a little bit to what Scott said before, what do you see as the perspective of sort of the role of capital, venture capital, innovation capital, and I think fueling some of that growth? How have things been changing, and how do you see the future?
Well, we're seeing a lot more, investors participate in the ecosystem. We're seeing funds that have never invested in the region having a position in assets A, B, or C. And that is sparking innovation, generating positive returns. And it's creating this positive cycle that will be unstoppable in my view. So I'm really bullish on the future of the region.
And for us as well, I would say that I think Brazil is 1 or 2 waves ahead of where Mexico is, both in terms of the talent and the level of financing that is going into the country. I would say that Mexico is ending the first wave and starting to enter the second wave of VC investment in Mexico. And I would say, Julio, Atlántico led our Series A in 2024. Since Atlántico has invested in us, we've more than doubled our growth in under 14 months. And I think a lot of it has to do with the level of advice that this new wave of VCs that is starting to look at these new countries brings to the table.
Yeah, I pulled the VC thing because we had a couple questions here that I wanted to address as well, just asking about the potential for realizing returns from venture investors. And just to be clear, some of the data that I showed of Latin American venture funds outperforming the global benchmarks is both on a not realized, but also on a realized distributed basis, also outperforming, so also on a DPI basis. And we've seen that a lot through also IPOs of companies going public in the US stock markets. It's names like Nubank, Stone, VTEX, dLocal, XP. I mean, the list goes on and on. So there's not really a question of can there be exits. I think it's been, that's sort of a proven point, and we think that'll continue to be the case. But saving the best for last.
Well, just before you do that, I think in addition to IPOs, the secondary market has changed the liquidity profile of the asset class globally and particularly in Latin America. Based on kind of the unicorns, the growth stage companies that you mentioned earlier, the secondary funds have been very much focused on the market. So we've been able to create a lot of liquidity for our investors through that channel as well.
And not to mention M&A. We've had multiple multi-billion-dollar M&A transactions from Corner Shop, Auth0. We had Pismo in Brazil just recently. So I do think it's a very liquid market for the great companies. But as I was saying, kind of saving the best for last, perhaps, Roberto can help us maybe paint the picture of financial innovation in Brazil. Kind of what's the agenda ahead for innovation at the central bank? And how do you see how things will look like maybe 3-5 years down the line?
So going back to the 4 concepts that I mentioned, which is the engagement and empowerment, the connectivity, the data, and the programmability, I think we lived for a long time in a period that banks were more transactional. Banks made more money being transactional or just financing the government. We are now going to the stage in which the transactionality is worth less and less because it can be done by digital processes in a much more efficient way. And I think we are now moving, actually, a lot of people say digital banks are the thing for the future. Sometimes I have a feeling that is the present and sometimes looking like the past because I think the future is programmability and tokenization, as was mentioned by Scott. When you look at the products that won't make sense in the future, you can name many. If you look at a credit card transaction today, you have the acquirer, you have the payment processor, you have the issuer, you have the merchant, you have fees all over the place. And basically, when you look at PIX, you're going to be able to reverse block the payment, and so you can do that with less intermediation, more efficiency, and you can actually get the merchant to discount their cash flow at the risk of the issuer, not at their own risk. So there are a lot of things you can do on that. And I think when you look at, for example, ATM machines, if you think that PIX already allows every cash register to be an ATM machine if you want to, and pretty soon you're going to be able to do basic banking functions out of any cash register. Remember that Brazil has many cities that don't have bank branches, they don't have ATMs. So a lot of these things, printing of money, carry of money around. When we go to the second dimension, I think this is an important one because I think we talk a lot about the importance of the currency, if the currency is the dollar, if the dollar is going to lose its status. But the technology will, I think, take everything over because you can link a lot of different payment systems with latency of less than 4 seconds. So the risk, the currency risk almost disappears. So when you think about what we are doing in terms of cross-border, again, technology is faster than the bureaucracy. We have solved the technology, we have solved the settlement, we haven't solved the governance of how to do that. So a lot of the things are stuck in the governments, but I think you could do a lot on that. And if you think about the cross-collateral for transactions that are international, you can do a lot more. On the open data, I think, like I mentioned, lower barriers of entry, the segmentation, I think the EI is going to play a very important role here. I think lower spreads is something that you're already going to see. atomize payments. With programmability, that becomes very powerful because you have the visibility and you can program that subject to something else that's going to happen. And again, the instruments like the webhook are going to be more and more powerful. The last one, and I think the most important, is the tokenization. And that comes with DREX. I think that takes everything to a different level. And that, I think, will project what the banks will look like in the future. I think it improves efficiency, improves cost and efficiency for the banks. Remember that DREX is a tokenized deposit, so the technology stays within the banks. And when banks look at assets and liabilities in a token way, it becomes much more efficiency. I think you're going to have a lot of efficiency in cash balances, people that leave the money without remuneration, things like that. And then I think we are going to bring the digital space closer to the bank. I spent a lot of time in the international forums, especially with other central bankers, being the only one defending proximity between crypto and stable coins and the traditional system, whereas I think for a long time everybody wanted to push them away. I think it's too late for that. I think time is showing that you're either going to do that in an organized way or in an unorganized way, so it's better to be preemptive. And I think you can actually mix a lot of features of blockchain to traditional payments, like, for example, you can actually link stable coins to debit cards and things like that. But then the question, just to end, is the choice of technology. And the choice of technology is, I think, where a lot of us are looking at this and saying, can we do it better? And here you have three risks: the fragmentation, depending on the technology that you choose, the integrity of the system, how much you want to put into smart contracts, if you do stack. I mean, there is a lot of things on that. And then the main problem, which is how do I do a DLT in which I have scalability and privacy going together? So I think those are the things that will dominate the future. I think the future of financial intermediation is more digitalization, but more than digitalization is programmability through tokenization. Thank you.
With that, I want to thank the Milken Institute for the opportunity for us to share this great story, for you guys for everything that you've built, and for being here with us today, and for everyone here joining us. Thank you.
Thank you.